this is Darlington from Darlington Academy. And in this video, I am going to show you guys a very effective way to create a strong budget. In the last video I made about budget planner tutorial for beginners, I did end up filling out a budget that looked exactly like this one on the screen. With the income being like the normal income of someone who is making like $3,500 to $4,000 a month. And when you take a closer look at the savings column, you would notice that the saving, it's not usual for everyone out there. Not everyone is able to save this type of amount considering the amount they are getting in, right? So the big question now is, how can you create an effective budget that would look like this? Although we are in the minus, based on this sign right here, is showing us that we are getting an income of 3,533, a savings of 1,438.54, but we are also spending way more, right? So we're still in the minus. How can you balance a budget like this, considering the fact that you're trying to create an effective budget based on savings and investment? So I was able to create that budget using a budget plan I call 30-30-40. Just so you guys know, the 30-30-40 budgeting plan isn't like a budgeting plan set on stone. It is a budgeting plan that I used in the past. A few years back when I was struggling with saving money, I was spending a lot of money and living on my credit card and everything. I had to figure out a way to get out of debt, right? So the 30-30-40 budgeting plan is something that worked for me in the past. So let's say, depending on your pay statement, it can be different for you. So based on the pay statement on the right hand side, if you take a closer look, the deductions is 663.94 and the gross income is 2294.90, and this is all what? Bi-weekly. So I was able to get the 30-30 formula by dividing my deductions by my gross income, and approximately it gave me 29% or approximately 30%, right? So this is like the 30-30 budgeting plan that I used. So depending on how much you make, if you still follow this the same budgeting as a plan I'm going to teach in this video, it is still going to help you. This is just an example of something I used in the past that worked effectively for me. So what is the 30-30-40 budgeting plan? The goal of this plan is to match your savings with your deductions, or your savings with your deductions, in order to save more money for investment purposes. So your deductions here we are talking about is the 663.94, meaning if this is how much I gross per weekly or bi-weekly rather, and this is the deduction that goes out of my paycheck, and this is what I receive bi-weekly. If this goes out, I am going to do everything possible to save the exact same amount. So that is the 30-30 strategy I am talking about. If I pay 663.94 in deductions, then I'm going to do everything possible for every paycheck I receive to save the same amount of money. So the first 30% is based on deductions on income tax, CPP and EI. If you're living in Canada just like myself, then you understand what these terms mean. On gross income, which approximately is 30% of this number right here, bi-weekly. So it is also important to note that these three numbers are the majority of your deductions on your pay statement. So the next 30 is based on saving 30% of your gross income. So if the first 30% goes to deduction, like I said earlier on, I am going to do everything possible to save the same amount of the same deductions that they took from my income, right? Then the last 40 is based on living expenses on the balance, meaning if the gross income is 2294.90 and the deduction is 663.94, and I save the same 663.94, then I'm going to be left with 976.02 bi-weekly, right? So how to calculate this is gross income minus deductions equals net income minus another deductions, which is now going to be your savings, equals living expenses. So let's put a number to it. So we're looking at 2994.90 minus the deductions equals the net income minus another 663.94, which I am going to save. Now I am left with 976 bi-weekly. So that means whatever happens, this is what I'm going to find out how to live on. The 976 bi-weekly, meaning if I am paid 976 bi-weekly and another 976 bi-weekly, I have to find a way to live on that amount, including my rent and every other thing. So now let's look at these numbers in a budget plan of someone using the 30-30-40 budgeting plan. So we are going to add these numbers and see what it looks like on a budget plan. So as you can see again on my screen, the income on my screen right now is just my net income, which is every 2 weeks. That is the only thing I included here because I can't include the gross profit, right? And then this is what my savings amounted to. This is the savings I am able to pull together every month based on the 30-30-40 budgeting plan I talked about earlier. So meaning if I'm able to save 663.94, like I told you guys, every 2 weeks. So in 1 month, I was able to save 1438.54. And then with my expenses, it's around 2773.65. But irrespective of that, I am still in the minus, right? The good thing about a budgeting plan like this is that you, right from the get-go, you are setting a savings plan based on investment purposes. So let's pull down this savings plan and see where I was able to channel those savings. Even if you're not able to accomplish this goal of saving that amount on your budgeting plan, it is super important that you input the numbers on the areas that you're interested in. It could be your short-term goals or it could be your long-term goals, so that you can see it super clear in your face, and then you can use the idea to know the areas to focus on once you start saving your money. So as you can see, I was able to channel based on this amount. This is the amount we're looking at right here. So I was able to channel 20% of this amount to my emergency fund and to education. RESP, this is for education for kids, and then emergency fund, right? And then I was also able to channel another 30% of this number here to starting and building a business. And then the final 50% is channeled towards home purchase and real estate. So if you total this numbers here now, if you put all these numbers that I put together here, because this is every 2 weeks. Every 2 weeks, I am saving this money. In a month, it gives you this number right here. So if we are looking at a budget like this, and then we're looking at our expenses, there is something I want you guys to pay attention. In the formal video I made, I said that when you have a budget plan structured like this and you're still in the minus, Obviously, that money is coming from somewhere. It could be coming from your credit card, your line of credit, or any other loan that you took, right? But when you are able to structure a budget plan where you are saving the same amount you are being deducted from your gross profit, then you, even if you don't have that money handy, but you've already included it in your budget plan, in your savings, then you are going to see what you're able to do next. So let's take, for example, that we have a budget plan like this. Let's say Darlington is trying to follow a budget plan like this. And after putting up this number, I am in the high end. Like, I am not even minus 678.44. I could be like 1,000 something, because if you take out these numbers, let's just play around with these numbers now. If I take out this number here and take out this number and just change them around, or just even leave this savings here and come to my expenses, look at my debt repayment, and I'm paying monthly for my credit card, let's say 200. And I'm paying, I have a personal loan again for, like, for example, monthly 150. I have student loan, you put that number, it could be you're paying 80 bucks. And then that is just for debt repayment. And then for housing, I'm going to leave that number like that. Some people might pay more, but I'm trying to go to those areas that a lot of people find issues with. Let's look at transportation. Let's say car loan and lease payments. Let's say you have a car loan that you're paying, let's say, depending on the type of car, the year and the model, let's say you're paying $400 a month for that car. And then car insurance, I'm going to leave it at 100. Some people pay 200, some people pay 250, some people pay more in gas. But you see the drill here. So the more you increase all these numbers, you're seeing that now you have a higher expense rate here. You see, our expenses is now 3,603, meaning that we are spending way more. So the goal of this budget plan is, I pay a certain amount in deductions. I am going to save that same amount in my savings for future plans. Now, how can I try to fix a budget like this? With a structure like this that I have, how do I start to look at the solutions to this budget? So the first thing I would do is I'll go to results. So we are going to save this data. Okay, I'll leave that, I'll save it later. So now it's telling me that where your money is going. So it's telling me that I'm saving 1,438.54 on savings. And another bulk of my money is going to housing. Another one is going to transportation. Another one is going to debt repayment. Another one is going to food. So this gives you, then this one, it goes to child care. So this gives you a breakdown of where your money is going. So how can we try to balance a budget like this? So if you are creating a budget plan, I would really, really recommend that you create a budget plan with a high focus on saving for investment. So let's see what we can do to this budget right now. So let's pull up the expense column. Now it's telling me that debt repayment, that I am paying 200 on my credit card. Now, what can I do to pay off this credit card? With me, when I was in a situation like this, what I did, knowing fully well that the interest rate on my credit card is higher than the line of credit, I had to dip hand in my line of credit to pay off my credit card. So let's say initially with a line of credit that was giving me that I was paying $50 because it was a line of credit worth $20,000, for example, and I was paying $50 to it. but I have a credit card worth 10,000, but I'm paying way more in interest rate because the line of credit was a little bit on the low end, 7.44 or maybe 8 point something, right? So now I had to use the money from my line of credit to pay off this credit card. And let's say we pay off this credit card. Now this number gives us 0. And now our line of credit gets to like maybe 120, still on the high end, right? And then from that same line of credit, I was able to pay off my personal loan, dropping it to 0. And then depending on you, if you have a student loan or not, let's say you have a student loan, you can pay part of it. You could even pay some of it and drop it to 40, or you don't have a student loan, whatever works for you. Now that is for the line of debt repayment. So now we can save this information and do what? Go back to our results to review. So let's look at the results again. So the chart is telling me that I am paying more in housing. So what can I do to my housing fees? Now I have transportation, I have housing. Now I can go back again and take a look at my budget. Housing and transportation. Let's look at housing. Is there anything I can do to my housing? So let's say I am renting a 2-bedroom apartment and I live by myself, or I'm renting any apartment and I'm paying 1,000 too. Maybe it could be a good idea to find a cheaper home, or if you're living in a 2-bedroom apartment, it could be a good idea to do what? It could be a good idea to rent one of your rooms out. So let's say we decide to rent one of our rooms out. That means this rent stays the same because it's an expense, and then we come to our income column and then you can see room rental. Then we just add 500 here, or 550 because it's 1,001, 550. Now automatically our budget is beginning to look good, right? So now that means because I was able to rent one of my rooms out, I am getting more income and I am beginning to do what? I am beginning to spend less. So let's go back to that result again and see what it's showing us. So because remember, the savings column is still 1438. The goal is to leave the savings column. I know this is like the hardest thing to do. Trust me, this is like super, super hard. A lot of us will be tempted to like, oh, okay, I can't save this amount. Like I said at the beginning, the goal isn't to save this amount right from the get-go. The goal is to have this at the back of your mind that if I am paying a certain amount in deductions, I want to save the same amount, right? That is just the goal. So if you can write it somewhere and then you work towards that goal, then that is how you are going to be able to like achieve a very good, you're going to be able to create rather a very, very strong budget plan. So let's look at this number again. So our housing, we've worked on it. Let's go to our transportation. Now, let's look at transportation, for example. So our transportation, what can we do to our transportation? Expense column. Housing, we've looked at that. Let's look at transportation. So I am spending $712 a month on transportation alone. So if I decide, for example, to get rid of my car and just buy a cheap car, that means I've eliminated this car loan. Quite all right, you're still going to bring money out of your pocket to buy maybe a $2,000, $3,000, $4,000 card. You can take it from your line of credit to just buy a car outright, but automatically you've gotten rid of that car loan or that lease payment you were paying. So automatically we are down to 168. That is looking good. So car insurance, because you were able to get rid of that brand new car, you can also save more on car insurance depending, right? Now we're looking at gas. You could save more on your gas. You could drop it down depending on what works for you. The essence of what I'm showing you guys in this budget plan is when you look at your results, it shows you the things you can start to work on. It shows you, okay, so I'm spending more on food. Let's take a look at this food budget and see if there is anything we can do there. Let's go back to the budget and look at food. So we're spending $3.50 on grocery. That is not bad at all. Depending if it's a family, it could be more. But we're spending $20 weekly on restaurant and takeout. So let's say we stop eating out and cook all our meal and eradicate that number. Okay, now we are left with 81.77. That is looking good, right? Now I get to save that too. It's just showing you the little things you can do. Again, we go back to our result and take a look. Take a look at our chart and see what we can do differently. Our savings, yes, I can drop my savings to balance the budget, but the whole goal is to see what I can do with my expenses. The whole goal is, what can I do to my expense column? That is all we're trying to do here. How can we reduce our expense column to budget, as in to balance our budget? So we've looked at debt repayment. We've looked at housing. We've looked at communication. Okay, we didn't look at communication. It's good there. Food, transportation. Transportation seems to be on the high side again. Let me look at transportation. Why is it? Okay, gas, 200, car licensing and registration yearly. That's good. So now let me see if, okay, then there is gift and donation. This is like when you buy things for people. Not saying you can't buy things for people, but these are some of those things that we do. We'll buy a lot of things. It could be little $20, $30 and $40 gift items for friends and family. Not saying that you can't help friends, but all we're saying is if you're struggling to make ends meet, then the whole goal is to drop your budget. So let's say we go down to buying $50 item gift for people that we care about, just maybe specializing on buying things that they love. Like I said, you don't have to follow the exact format I have here. The goal is to show you the things you can look at on your expense column and make changes. So as you can see now, our balance, our budget is balanced, right? Now I even have $18 in profit, even when I am still saving this amount, right? That is amazing. I'm not saying that everyone's budget is going to look like this, but this is just a clear indicator of what you can do. Mess around your expense column and see the changes you can do right here. Everything is all about saving money. The more you work on this and the more you increase your savings and your income column, which means you have more money that you have at hand even after saving all this money. Now we can use any extra money here to do what? Go to the next step, which is how to work on paying off some of those debts. So let's say for example now that we have a debt that we want to pay. So let's say we have a line of credit. Let me use this one, line of credit. So let's say we have a line of credit that we want to pay off. The type of debt is a line of credit, and the balance you have there on your line of credit, let's say could be, let's use a random number here. Let's say 8,000. That's the balance that you're trying to pay off. And the interest rate on that line of credit could be 7.44. And then the frequency that you want to pay is monthly. And here, the next payment could be August of next month, and the plan, how much are you willing to pay? So you can decide to pay $100 into your line of credit payment, right? Just to pay off. And then you choose the plan and save. Now it's going to give you the current balance, the frequency, and how much you're going to pay, and the target end date to finish that payment. Is showing you 2030. That could be a long time, but the whole drill here is being able to figure out how you can break these things down once you balance your budget, right? So now it's telling you that the number of payments could be 111 times, and you pay it off. And this even breaks it down further to show you how much, meaning the interest you're paying there is 49, and then if you pay 100, your closing balance is going to be this. This is kind of a fantastic way to calculate how to pay off your debt in order to balance your budget. So let's say now that on our budget here, after we've done our financial goal calculator to pay off our debt using this information, and we decide to pay $100 every month, knowing fully well that we're going to pay this credit line of credit off in a couple years, and we can increase and recalculate when we get more money, right? Then we go back to our budget planner and go to the budget. Once we go to the budget, all you have to do is you go to the debt repayment, and you just say, for my credit card or for my line of credit, instead of 120, I am adding extra 100. Then it gives you 220. Then you see that you're in the minus again, meaning once you do that, you are going to start working on your budget planner again. So let's say, for example, now that our main goal in this budget plan isn't really to pay off. Let's say because the only reason why a budget planner like this wouldn't be effective is if you lose your job, because once you lose your job, that means you've lost this income coming in, right? So let's say, for example, that our goal isn't debt repayment. So we take out this number. Let's say our goal isn't debt repayment. That means we have a balanced budget. So we are pulling in 4,083 based on the little tweaks we've made to our budget to balance it. And we're able to save 1,438.54. And we're still spending way more, right? For me, the goal, based on everything I've learned with financial education and personal finance, it's all about bringing down your expenses as much as you can. So this budget plan, the structure, the 30-30 budget plan strategy that I just showed you guys, whatever you're trying to use for yourself, it could be 20-20, 60 at the beginning, 40-40-20. The whole goal is to have a budget plan that is focused on saving for investment. As you can see right here, I have emergency fund and education, whereas every other thing on my savings is towards creating a business, creating assets that will increase my income. Let's say, for example, right now that we are able to successfully invest this money that we've been saving to create a business, right? And on our income, let's say, for example, you start a YouTube channel, which is a business that you want to invest in. And that YouTube channel at the beginning, you start making like $100 every month. And you have a rental property that you bought, for example, and it gives you like $100 every month. And you're investing in REITs, which is real estate investment trust, and it gives you, for example, maybe $50 every month. As you can see down here, our income is increasing a lot. our income is increasing a lot. Let's say over the years, you are able to stick to a budget like this. If you're able to stick to a budget like this, let's say over the years, you start making way more money on your YouTube channel. Maybe you're making 500 now. As you can see, your income is increasing. Or let's say you get to a point where you are able to make maybe 1,000 a month on your business, depending, it mustn't be a YouTube channel, it could be any type of business. Let's say you're able to pull in 1,000. I know people who make like 2,000 from their YouTube channel. Let's say you get to a point, you're able to like stick to this budget, you grind through it, and you are able to save 2,000 on your budget, right? Sorry, on your YouTube channel, which is a business based on creating a budget which is geared towards investment, right? And you have a rental property, and maybe your rental property is giving you 500, for example, a month, and your REITs, maybe you're buying a couple, it's giving you maybe 200. Like I said, this is just me making numbers up, but the whole goal is to see how this can blow up your income in the long run, right? Now you're making this money that is coming in as income, and then you are doing what? Those income that is even coming in, you are still saving it. It's not like it's coming in and you're spending it, you're saving it. When you check your results, you can see that you are making way more money, and then you are not even, your savings needs to go up too as well, but your expenses is way lower this time based on the money you are pulling in, right? This is something I feel like everyone out there who is struggling to figure out a way to save money, I believe this is crucial for you to look into budgeting. It's something a lot of us do not really pay attention to, but trust me when I tell you, this has really saved me in turning my life around, just by ensuring that I follow my budget to make ends meet. So if you're someone watching this video and you're interested to learn more, in the description area below, tell me the topic you're interested to learn more about, and I will make further videos about it to help anyone who is looking for a way to learn how to budget their money. I am not an expert, I'm just sharing my knowledge based on past failures and having an experience on how I was able to turn things around. I just feel like if I was able to figure this out, then there is someone out there who's looking for a way to make things, to change things around for themselves as well. Thank you guys for watching, and bye for now.